Tapestry recently reported better than expected earnings, driven by outperformance in its Coach brand. Bloomberg's Romaine Bostick and Katie Greifeld spoke with Coach CEO Todd Kahn about the brand's recent resurgence, Gen Z shopping trends, and the accessible luxury landscape.
We focus very much on trying to figure out Gen Z. I often say we're an overnight success story 6 years in the making. And Stuart and I, many years ago, recognized, among other people at Coach as well, that we were too much often considered a brand for everyone and hence a brand for no one. And we became extraordinarily focused on Gen Z. And part of our focus was listening, learning, doing a lot of sometimes what I call big data and little data. Big data is we're a direct-to-consumer business. We have millions of customers. We have a lot of data from them. Little data is sometimes going into people's houses, doing shop-alongs with them. They don't often know which brand they're speaking with, and listening to them. And we gain real insight from them.
Issue of cost. I mean, have you ran into any issues as of late with regard to being able to source your leather, whether it's because of tariffs or the cattle shortage we hear about, or even just the idea that, you know, the expertise in being able to tan leather is the number of people who can do that these days is a lot different than what it was when you guys were founded in 1941.
Yeah. So fortunately, we're a substantial house, and we have deep resources. We started as a manufacturer, so we still have a manufacturer mindset. We have leather experts in our company. We source leather from around the world. We work with the best tanneries. Our units are significant, so people want to work with us. So we do get the choice to get what's the best out there. We have not seen an issue with our leather suppliers, nor have we seen an issue with our manufacturers. We are making Coach product with some of the same people we've made for 20 or 30 years. We have very deep relations. Of course, tariffs is an issue, but one thing about our company that you need to bear in mind, we see in the next 3 years 70% of our growth coming from international. So when I'm selling internationally, tariffs are no longer in play.
That was Coach CEO Todd Kahn speaking with Bloomberg's Katie Greifeld and Romaine Bostick. And Romaine joins us now from the Coach store on Fifth Avenue, still with a great backdrop of Coach items behind him. Romaine, first of all, fantastic interview. I'm looking forward to watching the whole of it on the close today. It does feel like there's this big anxiety among shoppers, but Coach has been a brand that's been able to overcome that. What did the CEO tell you in terms of how he pulled it off?
Well, I mean, it's funny. When you think about a fashion brand, you think sort of everything comes from the gut. It's all about just the design. But this is a company that's very data-driven. And you go back to about 10 years or so ago when Todd Kahn showed up. He actually started as a general counsel. He's a lawyer by training. And a few years after that, there was this idea of who is actually the future shopper. Now, of course, we know it's always going to be the younger generation. But what did they want? And they made this switch from what they used to call affordable luxury to expressive luxury. And this was all data-driven. The idea that Gen Z is spending about 20% more than other generations on non-essential goods. So things like beauty, handbags, if you will, things you don't necessarily need, but you certainly want. And they really leaned into that data, and growth has been phenomenal. The most recent quarter, you're talking about 20+% growth in the Coach brand alone, and they see that being able to sustain itself not only here in North America, Danny, but overseas as well, particularly with some of the growth that they're doing in China. And they're really competing on a large basis on price point. Remember, this is to a certain extent a luxury item, but their price point is kind of in that $200 to kind of $500–600 range, which is well below what you would see if you walk down Fifth Avenue to Louis Vuitton, Gucci, or one of the other big luxury retailers here.
So what does that mean as to how they're handling tariffs and increased costs, Romaine, if they are seeing any impact?
Well, we have seen the impact, and you saw that reflected in the most recent earnings report. They've balanced that out. The hit to margins that they've taken with regards to tariffs, they've made up to a certain degree by effectively discounting less. So overall, their price point has stayed the same, but what they call their AUR, which is effectively the amount of more money that they're making off of each individual item, that has actually gone up. And that seems to be the balance that Todd Kahn and his team are really going for here. The idea that you just hold the price at the top, don't discount much, and then at some point that will compensate for the elevated tariffs. We should point out there's been a lot of research out there right now, Danny, that shows that not only are prices much higher for leather, something like 20% than where we were just a year ago, but those prices are going to stick. So even if those tariff rates come down, the Leather Council is actually projecting that prices will still end up being 7 to 10% higher for basic leather for companies like Coach going forward.
Romain, how much of this is a success story of Coach and Tapestry versus affordable luxury hanging in or even becoming more attractive as consumers trade down? Are the Capris of the world, for example, still doing as well, a company which, of course, we should note that at one point tried to merge with Tapestry?
Well, the short answer to that is no. And Todd Kahn said also in the interview, the idea that effectively what has been happening is Coach now is the market. It basically says that at that price point and in that sort of accessible luxury range, they are the only ones really growing that market. Now, you can quibble a little bit with some of the numbers there, but when you look at some of their more direct competitors, none of them, and I mean none of them, are growing nearly as fast as Coach. And in fact, some of them are still in contraction.